Well, welcome everyone to our symposium, Managers and Regulators, Partners or Adversaries. I thank you all for coming. For starters, I'd like to ask everyone to please mute your electronic devices if you have not already done so. My name is Maury Nunes, and I am privileged to act today as moderator for this distinguished panel. I am blessed with this opportunity as an adjunct professor here at the McDonough School of Business at Georgetown University, and I am also an attorney in private practice, representing primarily privately held companies and nonprofit entities. When we scheduled this symposium, it turned out that Groundhog Day was the right day for it, and so here we are, and in accord with the movie Groundhog Day, I guess we'll be repeating everything over and over. And in accord with the movie Groundhog Day, I guess we'll be repeating everything over. All right. The first order of business here is to thank Dean Chris Cormish and her assistant Emily Kalish for all of their work, which was quite substantial in helping us put this program together. And our thanks also to Kat Song of the university, who did a great job handling the publicity. We also owe a special thanks to the sponsor of our reception, Chesapeake Investments, and we have three representatives. If you could all stand for just a moment. From my left to right, Joanna Saw, Daniel Lim, and Benjamin Kim are representatives here. Chesapeake Investments specializes in commodities and derivatives trading, and I can personally attest they do a very good job. I urge you all to visit their website and support our sponsor. Speaking of the program and the panel I am about to present, I also have to mention, if you look at the program, there may not be a lot of identity between the pictures you see there and the faces you see up here. I hopefully make a better moderator than I do a digital computer programmer technological guy, and so many of the photos are either squashed or slimmed down, which I figured I wouldn't change the ones that were slimmed down anyway. Nevertheless, allow me to introduce our panel, and I'm going to start on my right, and we'll move, that's the audience's left. First of all is Barnes Lawson, Esquire. He's an attorney who practices locally regulated land use law in Virginia. And Barnes, would you say a word or two about your practice?
Thank you very much. For about 3 years, Maury and I shared offices in Arlington. It's a pleasure to be back associated with him in this capacity. I've been practicing law for about 30 years. I specialize in land use. If you buy a piece of property and you want to use it for something specific, if you come to me, I'll help you through that process. We've had clients that do urban villages, Pentagon City, Merrifield Town Center. We have clients that want to that come to us and they want to build a high-rise. We'll do that. Some people want to open up their business in it. A group of doctors right now that we're assisting. Sometimes clients come to us and they simply want to put an addition on their house, and we'll help them through that also. Recently, there's been a new body of law that has arisen, and we assist people who receive violation notices, whether zoning or property maintenance or building code or whatever. We assist those people, and we file appeals. We go to the regulatory bodies and argue their cases. We always try to resolve it if we can. In rare instances, we may end up having to litigate it in court. So that's kind of a quick overview of what we do. If you have a piece of property, we can usually help you through that in Arlington County and Fairfax County.
Thanks, Barnes. To Barnes's left is Dr. Lisa Kauffman, who chairs her own dermatology practice known as Georgetown Dermatology, and is thus subject to much local regulation of the business attributes of her practice. So Lisa, can you please give our audience just a quick idea of where you are coming from on this, being here today?
Well, up to 4 years ago, I was a professor and chief of dermatology here at Georgetown University at the hospital across the street. And subsequent to that, I went out on my own into private practice. Basically a well-trained academic, double-boarded in skin disease, dermatology, and skin pathology, all of a sudden caught like a deer in headlights, trying to navigate negotiating leases, building permits, many other things that we'll talk about subsequently. I am the mother of 6-year-old twins, so this has taught me how to be patient and how to hone my negotiation skills, which has helped me with some of this regulation.
To my immediate right is Director Eric Freedman, who leads the Montgomery County Office of Consumer Protection that regulates business relative to consumer matters in that local Maryland jurisdiction. And Eric, can you tell us a little bit about your agency, please?
Sure. Let me just very quickly say, if anyone ever has a consumer protection question or problem in Montgomery County, please be sure to contact our agency. And if you say that you attended this symposium, we'll make sure you get expedited service. If you have a chance later, please pick up one of our brochures. We're a local government consumer protection office. We're a law enforcement agency. We enforce a local Consumer Protection Unfair and Deceptive Trade Practices Act. We have the authority to issue subpoenas, civil citations, bring lawsuits, settlement agreements, hold administrative hearings. Most of the complaints that we get are in the area of auto sales and repairs, including auto leasing, financing, repossessions. We deal with home and construction, home improvement cases, unlicensed contractors, all retail sales and advertising, impound towing, financial scams, and we're a local government office with dedicated employees there to help serve you.
And to my left is the similarly named, but not exactly, Bill Freedman, who is Deputy Chief of the Consumer Affairs Bureau of the Federal Communications Commission. And Bill, can you describe for us what your bureau does within the FCC?
Sure. We have same names but different mothers. I have been active in communications law for about 34 years. I used to be an all-night disc jockey in Cleveland, which is where you start from the bottom. And I have been working at the FCC. I worked there for about 5 years. Then I was in private practice representing people before the FCC for about 20. I came back and I first worked in the Enforcement Bureau, which enforces our rules. Then in the Media Bureau, which regulates primarily cable, satellite, and broadcasting. And for the last year, I've been in the Consumer and Governmental Affairs Bureau. The Consumer and Governmental Affairs Bureau develops and implements consumer policies, including those regarding folks with disabilities as well as tribal nations. We also maintain a consumer call center that is available 24/7 by phone and also by internet and also by email, taking complaints from folks around the country, dealing with the companies that we regulate. We also coordinate activities with state, local, and tribal governments.
Thanks, Bill. John Maxwell, next to my left, is the CEO of John Marshall Bank, which is subject to and grappling with a great deal of federal regulations, such as that being introduced under the recently passed Dodd-Frank bill. John, would you give us the skinny on John Marshall Bank?
Glad to. Again, John Maxwell. I've been in banking a little over 30 years. In fact, 30 years ago, I started as a janitor of a bank. And after the last 5 years, I may very well end my career as a janitor of a bank. So I've come full cycle. And actually, I'm here today mainly to do whatever Eric Freedman wants me to do with our branches in Montgomery County. But John Marshall Bank is a bank that was opened back in 2006. My background is that I had started another bank prior to that in 1998 called James Monroe Bank. We sold that bank in 2008 to another larger bank in the area. We put a group of investors together and effectuated a change of control of a small community bank that had started in 2006. Renamed it in 2008 to John Marshall and have grown it to a little over $400 million in assets. We've just been recognized as the second fastest growing bank in the United States and one of the most profitable banks in the United States. We provide, our primary focus is everything that a community bank does, and that's work with relationships with borrowers and depositors. But we focus and have a specialty in commercial real estate finance, small business finance, government contract lending, and cash management services. And we have 5 locations throughout the metropolitan area.
Thanks very much, John. And last but not least is Sandy Saunders, who is a co-managing shareholder in Greenberg Traurig, a law firm that is headquartered out of Miami but has a very substantial office here in DC and other offices throughout the country. Sandy's practice has much focus in energy and pipeline regulation, which also invokes and involves an international dimension. So Sandy, can you give us a quick overview on your practice, please?
Sure. I represent vertically integrated energy companies primarily in the midstream, which is the pipeline, the transportation aspect. It's a heavily regulated industry. Most people don't even know it's around until one of them fails, and then there's a problem. They're regulated on a day-to-day basis, both as to the rates they charge. A portion side of the business I don't get involved in. I get involved more on the practical side, on the operations. So they're left with being regulated on, on a regular basis, audited, et cetera. And then also there's an enforcement component as the agencies have their enforcement authority over the pipeline. So one day you see your regulator, as Maury has titled this up, as your partner, who's talking to you about your rates and how you stay in business. And the next day they're banging away on you, potentially putting you out of business and looking at you as these days a revenue stream for the Treasury through their capacity to fine us.
Thanks, Sandy. So as you can see, on one side of the moderator, we have a local group, and not only local, but representing all three metro jurisdictions, Barnes from Virginia, Lisa Kauffman from DC, and Eric Freedman from Maryland. And to my left are folks that are involved primarily in federal regulation, but not only that, John Maxwell's bank is primarily federally regulated as to its regional operations. Bill's organization is dealing in national scope, and Sandy's practice involves an international scope. And in fact, he didn't mention it, but I will. When the president of one of the large Russian oil and gas companies was arrested in the Soviet Union, Sandy was the American counsel who was flying back and forth regularly to Europe to assist in some of the aspects of that case. Our goals here today are basically three. One, we want to tease out the commonalities. What is it about regulation that, whether you're trying to get a license for your dog or you're trying to get your airline certificated, what are the common themes? What are some of the do's and don'ts, and possibly some of the best practices that apply? And if you do get to the point where the regulator and the regulated are in a standoff, what happens? You have to fight? Does one side have to capitulate? How do you know when you get there? What are the alternatives? So I have high hopes that with this very diverse and conceptually different backgrounds among our panel, that we're going to be able to determine these commonalities and get to that point. Those commonalities that we're seeking are the general, but I want to start with the very specific, and on that basis, let me turn to Lisa Kauffman and ask you, Dr. Kauffman, when you were establishing your practice, can you describe for our audience and the rest of our panel some of the regulatory, we'll call them challenges, that you faced, and if possible, can you give us an idea of how that affected the costs for your practice and still do today?
Well, in order to open a medical practice, you need to satisfy many regulatory agencies, starting which simply getting a medical license. But in order to practice, you don't just need a medical license, you need a national provider ID number, you need a controlled substance number, and not just a controlled substance number with the federal government, but a controlled substance number for the state in which you practice. On top of that, you need to make sure that you have adequate continuing education to continue to satisfy the licensing requirements, so you maintain your licenses. And then, once you have all your professional numbers, you then move forward to the next step, which is getting numbers for the practice. And that includes tax ID numbers. If you sell, as a dermatologist, any creams or lotions, sales tax numbers, and then you move forward to the next set of numbers, which are your clinical and laboratory licensure numbers. And our practice has the physical practice where we see patients in DC, but we have a laboratory where we make slides in Easton, Maryland. So this required an attorney in DC, namely Maury, plus an attorney in Maryland representing 2 different PLLCs applying for different sets of billing numbers with different states. In order to have a license number for the lab, it's called a CLIA number, you have to fill out a 9-page application. The application has some very straightforward questions, or questions that should be straightforward. For example, what is the name of your facility? Where is it? And how many specimens do you process a year? The problem with this, though, is in order to have a facility, you have to have signed a lease and presumably started to pay rent. In order to be processing however many hundreds or thousands of specimens you process, you have to have hired personnel to do this. However, you cannot bill for any of your services unless you have your billing numbers, and you can't have the billing numbers without having your CLIA, which is the Clinical Lab Improvement Amendment number. And this delay can take anywhere between 6 months to a year for anybody starting out a practice. And it seems that there's no way around this except to have 1 year of your life where every day you fill out applications and you're calling up different agencies in different states, hoping against hope that their monthly meeting for your application will be at least the week before the monthly application for the next step of the next process that you're trying to do.
Let me hold you there, Lisa, if I may. It gives us a pretty good idea of some of the challenges. I'm sure we could probably go a couple hours on this because I remember what it was like. John, let me turn to you on the federal side. And with the past couple of years, everybody's aware that the banking industry has been in some degree of, we'll call it excitement. And I'm wondering, on the federal side, what kinds of regulatory challenges you've faced and the bank has faced?
Banking has always been a very heavily regulated industry. In fact, it's one of the most heavily regulated in this country. I've started 2 banks, essentially. The first one was back in 1998. And at that point in time, there are 2 types of banking charters. One is a national charter and one is a state charter. And whichever charter you choose determines your primary group of regulators, either the OCC and the FDIC, or the Federal Reserve, the state banking authority, and the FDIC. The application process back then was essentially 3 separate applications, each one about 200 pages, with basically asking the same questions in a different format. And the process took about 4 months for approval. Fast forward to John Marshall days, when we were looking at starting a bank in 2008. That process remained the same in terms of the application. However, the time frame had been extended to a maximum of 4 months to 12 to 18 months. There is, because of the change in the economy and the general concern about banking, the regulators took a very conservative approach to allowing any new charters at all, and basically put up a barrier to entry. There are many stories out there of bankers who went to start a bank, raised their capital, and then after 18 months, didn't get an answer of yes or no, but basically said, we'll let you know someday. So it has become quite a different world in banking, and the barrier of entry has gotten much higher. From a regulatory standpoint, I run a community bank. That's hard for most people to distinguish as to what that is, but basically it's a bank that is headquartered in the region or community that it primarily serves, and typically today's world has assets of less than $1 billion. We are very, very heavily regulated. Dodd-Frank is the newest representation out there that has now gone into law, and it will add a significant amount of regulation to the banking world in general. But the cost that will be borne primarily will come into the community banking realm. Most of the bigger banks are able to pass those costs along to the consumers because of their heavy emphasis on fee income generation. It's very easy to differentiate that, add fee income or add fee income sources to their portfolio, and then raise costs. Community banks don't have that luxury. Most large banks like B of A will take 30 to 40% of their income in fees. Most community banks, like John Marshall, typically get less than 5% of their income in fees, and dependent upon spread income, the difference between what we pay on our deposits and earn on our investments and loans, as their primary source of income. So more regulation directly affects the bottom lines of community banks. Dodd-Frank is about 2,300 pages of regulation. We're expected to get about 250 new regulations out of it. The good news is that it will make the entire financial world better, mainly because it will start to regulate more frequently and more stringently the non-bank entities, the mortgage companies that are not part of a bank holding company, the payday lenders, the private education lenders, the folks out there who really fly beneath the radar screen of the federal regulatory agencies. And a lot of what has happened in the last 5 years was because of abuses within those systems. I'm not giving the big banks, putting them off the hook, because when you're securitizing subprime mortgages and you've compromised your underwriting standards, there's a lot of blame to bear there as well. However, in the community banking world, most of the community banks play by the rules, and we're not a part of the downturn, but instead suffered because of it. So the regulatory burden is substantial. It has increased dramatically. In terms of cost, in my little bank, my bottom line is about $2.8 million last year. $500,000 was purely for regulatory costs, direct and indirect. The banking industry has estimated that Dodd-Frank will cost the banking industry at least $10 to $20 billion over the next 5 years in terms of implementation. In fact, all of regulatory cost or compliance costs in banking in 2010 was estimated at about $26 billion. In 2012, it will be somewhere around $32 billion. So there'll be about a 22% increase in costs just from Dodd-Frank alone.
Okay, so I think what I take out of these two discussions are what we might describe as three different problems that have been surfaced so far. One of those problems is the notion of ambiguous requirements, as Lisa indicated, where you got questions that how to answer these questions. There's a catch-22, chicken and egg, or the questions just can be interpreted in more than one way. Second issue, which seems to be the overriding, most powerful issue, is the issue of delay from the regulatory side in terms of just waiting to get an answer when you're trying to comply with the law. And the third issue is this multiplicity of regulations rather than for a particular type of activity or a particular type of business being able to go to what might be sort of a one-stop shop where you could deal with everything at one time in one place. So let me turn to our regulators here. Let me go to the federal side first. And Bill, let me ask, is there a way for government, or has government looked at this issue of the impact of delay on the people that it regulates, and what's the conclusion?
Well, government has looked at all of these problems in terms of the burdens that our regulation places on businesses and the other folks that we regulate. Our rules come primarily from statutes that are enacted by Congress in response to some desired public good. And usually what happens is the way an FCC rule or a federal government rule is created is that we run what's known as a rulemaking proceeding that under something called the Administrative Procedure Act requires that we provide public notice of what kind of rules we're going to consider adopting, and then allows all interested parties the opportunity to come in and comment on them. Last year, President Obama issued a couple of executive orders that called on federal agencies, including the FCC, to take a hard look at the cost and benefit of any rule that we're considering adopting. And a great part of this rulemaking proceeding is getting input from the industries and the individuals that we're going to be regulating to find out whether the benefits to the public outweigh the costs to the folks that we're regulating. The second thing that these executive orders required federal agencies, again like the FCC, to do is take a retrospective, hard look at all the rules that are on the books. The FCC in particular our regulation is driven by ever-changing technology, and industries change, the technology changes, and what we try to do consistently is remain abreast with those changes in technology. For example, one of the major areas that we regulate, and we're regulating when I came into the FCC 30 years ago, was broadcasting, and it has substantially changed with the development of satellite and cable and the preeminence of the internet, and we have to change our rules to keep pace with these technological changes so that we don't overburden industries. So another thing that these executive orders did was, again, require us to take a hard look at all of our rules. And what we're doing is, and all federal agencies are doing this, we're looking at our rules and asking these questions. Has the rule been affected by changes in technology, new scientific research, or changes in the market structure? Is there a disproportionate or undue burden on particular entities resulting in unintended negative consequences? And has the rule been subject to frequent requests for waiver? As a result of this process, which really started at the middle of last year, we've already done away with 190 rules, and each of our bureaus and offices is actively taking, again, a hard look at those rules to see which ones could either be eliminated or revised to, again, lessen the burdens on the folks that we regulate.
No offense, but I'm worried that doesn't quite answer the question. It's not an issue, I mean, that goes to the multiplicity issue. It does. But it doesn't deal with the delay issue, which is in a sense a personal issue or an organizational issue in terms of how a regulatory agency might be structured, how much personnel, manpower there is available, and what the efficiency and the willingness of that manpower is to be responsive to those that are regulated, which I think is part of the argument that Lisa has, and John, I think that's part of the argument you've had as well, or part of the complaint, let's call it. Is there anything being done that you're aware of about that? It's a personnel kind of issue.
Yes, there is a continuing monitoring of the backlogs of applications and petitions and requests that are before every part of the FCC, dealing with the agency that I'm most familiar with, where we continually monitor what the backlogs are with the idea of taking care of the things that are older and also increasing and speeding up the process of reviewing applications that come in. And as a part of that backlog review, we're constantly looking at our allocation of personnel to find where folks could be put to eliminate that backlog and hopefully eliminate delay.
Let me turn to our other regulator, Eric, and ask you, can you comment on the same, particularly on this delay issue and lack of responsiveness?
Sure. When you listen to Lisa's story and John's story, it's understandable that government regulation can be considered burdensome. But it certainly is not evil, because the motivation for this regulation is to protect us, to protect all of us as consumers. So when we go to Lisa's office and her lab results come back and it says we don't have skin cancer, we want to have some assurance that the lab is going by proper methods and that we can trust the information. And by the same token, when we go to John's bank, we want to make sure we're not getting a toxic predatory loan that's going to blow up in a few years and we're going to be losing our home to foreclosure. So the motivation is to protect consumers. Quick example, in Montgomery County, we license new home builders. So yes, the new home builders board meets once a month, first Tuesday of the month. And the timing may mean that you have to wait a whole month before you can get a license as a new home builder in Montgomery County. But the balance there on the other end is that a consumer in Montgomery County is going to be paying several $100,000 in a deposit and they want to have some assurance that you know how to build a house, that it's going to be built properly, that it's not going to have huge construction deficiencies. And you may have a consumer with many years' worth of problems and frustrations because an unlicensed builder or an incompetent builder may have constructed the home and walked away from the settlement table. So it's clearly there can be delays. And in an economy when government regulators are having their budgets cut and the cumulative effect of having short staff, there can be delays there. But again, it's a balancing act, not designed to be evil, but designed there to protect us as consumers.
So one of the things I take from this is that the responsibilities of the agencies and just the vicissitudes of life, budgets, et cetera, the constraints have an impact. But first, let me turn to our two attorneys here. Barnes, if you had a client that came to you and they can't get an answer out of the regulatory authority, is there advice you would give them or action you would take?
Well, Maury, a couple of thoughts. I jotted down a couple of thoughts as I listened to this. What Arlington has done is we have, when someone goes and applies for a business license, they'll assign an individual to that business, and they will walk them throughout the county. They'll take them to zoning, they'll take them everywhere they need to go in order to get permissions to open up for business, and it's become a lot more effective in Arlington with that. A second thing that has happened is if I file for a rezoning in Virginia, we have a state code that requires a decision within a year. If I file for a special exception, I have to get an answer in 4 months. If it's a variance, it has to be in 2 months. So I think that often we can go to the legislature and set time limits by which a response has to come. If you can't get an answer, all you can really do is go to the person who's supposed to make the decision, and if you don't get an answer from there, then you just need to climb the ladder as you would in any other interaction with an entity.
Thanks, Barnes. Sandy, you want to add anything to that?
Well, for some of my clients in dealing with the regulations, there are times they like certain regulation. I mean, for certain industries, it helps to set a standard, and if you have cowboys in the industry and they're going to go and cut corners and there are going to be problems, that's a problem for the entire industry. The next time you want to go and build a new pipeline, et cetera, if there's been a failure a couple miles down the road, that's a problem. But at the same time, the proliferation of the regulations can paralyze your business. And if you're being required to take certain actions that just don't have any practical application, you burn off funds, or it can significantly raise your costs. And then there's a question, how do you stay in the industry? What does it do to your price structure, which makes your clients, unhappy, and then flips around and makes it more difficult to do business. I see with clients, in one example, clients have turned away from doing business because the regulations just reach a certain point. It goes more to what people were talking about with Dodd-Frank and Sarbanes-Oxley before it. The great, yes, it was designed to address certain problems, but I know of at least 2 businesses that have turned away from the United States from bringing their businesses here because the cost that they looked at in administration and accounting and oversight to comply with Sarbanes-Oxley, and now with some of the Dodd-Frank, they can go to London with London's real estate prices and function more efficiently and less expensively.
And so if you had clients...
They're going. I can't argue with them.
No, I hear you. But if you had clients that were coming here and faced this kind of delay, such as John or Lisa described, is there advice you'd give your client about how to deal with that delay, anything more than what we've heard from Barnes?
No,
Okay.
not for the industries I work in.
Okay, all right, not from the industry side. Well, let's talk about the constraints issue, because we've heard a lot of the complaints on the private sector side, but I don't know that life is all beer and Skittles on the regulatory side. Eric, let me turn to you. Everybody knows we're in some economic difficulty. There's been lots of talk about various budgets in many of the local governments being constrained, in addition to, but including the monetary, budgetary constraints you face. What are the other constraints that affect how regulators act, respond, and do their job?
Well, I think we started at the premise that regulators are sensitive to to the concerns that businesses have, because we do have to work together. Quick example to demonstrate that would be in the inspection of gas appliances. When we get a new gas furnace or gas dryer, water heater, it has to be inspected to make sure that it's been properly installed by the plumber. And so there are all sorts of stakeholders that have some concerns there. We did a study and we found out that over 2/3 of the gas appliances sold by the big box stores in Montgomery County, we're talking about Sears, Home Depot, Lowe's, were never inspected by the regulatory agency, in this case, Washington Suburban Sanitary Commission, even though the plumbers, in many cases, had charged the homeowner a permit fee. So then you have a situation where how can you accommodate the businesses, the plumbers, who want to be able to expedite it, meaning when you have no hot water and you have to go out to buy a new water heater, the plumber wants to be able to install it right away. The plumber wants you to be able to use it right away. The homeowner wants to use it right away as well. And at the same time, we have an inspector who needs to get there to make sure that it's not going to blow up or have carbon monoxide poisoning. So there are balances that have to go on, and the difficulties in terms of homeowners who waited at home for the plumber to arrive to install the gas water heater to begin with, and now they have to wait again if the inspector comes out. So there are different ways that all the stakeholders, the regulatory agencies, the plumbers, the retail sellers, in this case the big box stores, and the homeowners, all their interests have to be balanced in some way. And we're working on situations where perhaps the plumber can use his cell phone to schedule the inspection right from doing the installation right there, and finding new ways of using technology or the internet to schedule things, or to have some type of self-certification, because the manpower isn't there, and nobody wants to be affected by a delay of filing for a permit before the work is done, waiting for an inspection process. So again, the motivation is there to protect homeowners, make sure work is done properly, and there's always the opportunity to improve the system, to make it more efficient and to save time.
And those constraints, any other constraints that you face besides, what I heard was manpower. I think there was a budgetary notion in there, and the fact that you've got demands that are not necessarily in concert with one another. Any other constraints that are major for you?
Well, the only other one would be a reluctance to comply on the part of the regulated or other people as well.
Bill, would you add anything to that?
Sure, I would just echo what he said about these are difficult budgetary times for federal agencies. We're not filling a lot of positions that become open when somebody retires or they leave, and we have ever-increasing work demands on us. One of the things that we do try to do is expedite action on applications, for example, if they're in good shape and they're not protested by outside parties, and they can be granted without give and take between us and the applicant. So, one of the things that would minimize delay is if you get a good quality attorney like the folks on this panel who are familiar with our procedures, so that when you file something, it doesn't require that type of give and take. When we do get an application, like say we get an application for a TV station to renew its license, ordinarily that'll be processed by a program analyst, a non-attorney, but we're required by the Communications Act to give interested parties the opportunity to protest the grant of the application and argue that for some reason the license should not be renewed. Once that happens, processing of the application goes from a program analyst to an attorney that has to prepare an order that has to be approved up and down the chain and adopted by either the Bureau or the Commission. So that adds delay as well. So, sometimes delay is always unacceptable to us, and it's unpleasant, and we know what the impact is on the folks that are seeking action from us. But sometimes we have no choice if somebody, for example, files a protest, and we're bound by the law to consider that protest.
So what I'm also hearing in there is that frequently the nature of what's in the authorizing acts, in the legislative acts themselves, create an inability to expedite. Is that a fair statement?
Well, Ed, it builds in delay, but it builds in delay because the lawmakers have decided that one of the things that an agency like the FCC should do is be responsive to folks who don't want us to do something that's asked for in an application, and we're duty-bound to consider those comments.
Lisa, when you had your experience that you described in great detail, did you find out at any point why you were facing these delays, what the motivation was, or what the specific constraint was that was preventing you from being able to open your business, your practice?
Well, it appeared that all these different regulatory agencies that one had to go through didn't speak to one another. In other words, they were all totally separate and independent processes, and one agency couldn't work without the full approval of the other. So instead of being able to multitask, sometimes you hit roadblocks where you had to go through one agency and then the next, rather than to be able to have something ongoing in several at once.
And John, in the circumstances you described, were you ever able to find out why things got held up, or why, for example, some of these banks were facing we'll just get back to you, don't call us, we'll call you kind of arrangement?
Well, the process 10, 15 years ago was not shrouded in secrecy as it is today. A lot of what the regulators, and don't get me wrong, I really do believe in regulation. If there's anybody in here from the FDIC or the Federal Reserve or the OCC, I love you guys. And I have a great deal of empathy for the folks who have to enforce the regulations and have to deal with bankers like me and come in an adversarial role and enforce the thing and what's on the books. But it is a necessary part of our society, and it needs to be a part of banking. However, much of the examination process, the application process, is shrouded in secrecy. I think there needs to be a little more transparency in that regard so that we can understand what's wrong, how do we fix it, and move forward. And as we say, in the private sector, get on with business. When you tell a group of investors who have raised $12 million and have started to hire people, which is required as a part of the application process, and this wasn't my bank, but this is a real-world example in Virginia, you tell them, we'll get back to you after 5 or 6 months, and you don't tell them what's wrong, you don't tell them what else they might need to do, you give them no indication at all of what the weaknesses are in their application. That's unfair. And that is exactly what happened. This group sat and waited for 18 months. Meanwhile, their shareholders were asking and starting to get cold feet. They had spent about $1.5 million in expenses to carry the bank, which wasn't even open yet, to the point where you could open it. And after 18 months, when they got their answer, it was again shrouded in secrecy. There was no definitive answer. That's the impediment, and that's the difficulty in the process. You know, the one thing for certain out there is that the vast majority of banks and bankers want to work hand in hand with the regulators. That's been my entire career, is that level of trust needs to be there. But it goes both ways. We have to be able to understand the process and mitigate the risks and answer the questions. But if you're not getting a response and you're not getting answers to your questions and don't understand what's going on, there's not much more you can do. And unfortunately, in the banking world, if you are not happy with the process, or if you get an adverse action or an exam that you're not happy with, there really is no appeals process that works. The only way that you can appeal it, if you are an existing bank, is to go to the ombudsman of the agency that already examined you, and they are an employee and a part of that agency. So most banks will not do that for fear of one of two things. Either they know that the agency or the ombudsman is not independent, or because of fear of retribution. So, and banks do not have a statutory ability to sue the regulators in state or federal court. So again, it puts forward an adversarial relationship that doesn't really need to be there, and I think transparency is probably the best answer for that.
Bill, you wanted to comment on that?
Yeah, just an experience that I had when I was outside practicing law before the FCC. I represented a cable company that wanted to get an authorization for a little repeater station that hopped programming from a studio to the head end where the cable company distributed the programming. And we filed an application for a particular frequency, and somebody got back to me and said, we want you to change this in the application. So I changed that in the application, and I waited a little while, and then I finally called him and said, what's going on? And he said, well, you've got to change this in the application to do this. And we went back and forth on this for about 6 months, and I set up a meeting with him and said, what's going on with this? How come you can't grant the application? And he said, I can't tell you. So I ultimately talked to one of his superiors and found out that there really was nothing wrong with the application. It was just that the frequency that I had asked for was being reserved for something else, but he felt he wasn't at liberty to tell me that. And so we changed the application to a different frequency, and we got it granted immediately. But what was frustrating about it was it hamstrung my client for 6 months when he was trying to operate this cable system. And it was a real lesson to me, and I think it's a lesson that is shared by people at my agency about the need for transparency. And if you are encountering substantial delays with an application, sometimes what's useful is to set up a meeting with either the person who's reviewing the application or that person's superior to try to create what was just mentioned that's very important, which is a feeling of trust between the parties, that nobody's trying to hide the ball either at the government end or at the applicant end. Everybody's trying to achieve the same result. And sometime, if you can just set up a meeting and create a dialogue and try to create that degree of trust, it's amazing what kind of information you'll get. But the complication that I wanted to mention is that if somebody files a protest to an application, then the opportunity for that type of dialogue is much less, because you have something known as the ex parte rules, which is if you're discussing an application on the merits with the regulator, the other side who's protested the application has to be present at those meetings. But generally speaking, if you don't have an application subject to those constraints, I would strongly urge a meeting with the folks that are processing and passing judgment on the application to find out exactly what the problem is. It may be something very, very small that you can very easily clear up if, again, you create that dialogue and that degree of trust.
So we've got two issues surfaced there. One is the issue of trust, which is important for any kind of transaction. And the other is the importance of communication. Sandy, let me turn to you. When you've got a client that you're going to meet with an agency or meet with regulators, if you don't sense that trust is present, in fact, if you sense that there's animosity, where does that take you?
Well, it takes us to a very bad place because it makes the client much more skeptical and much more less willing to communicate. And what I've seen in the last 5-6 years is that there's just been a real development of more of a gotcha approach with some of the regulatory agencies, and it really hinders what can be done. One of the biggest examples is when you respond to an emergency in the pipeline industry. If there's been a failure and there's a leak, that you now have criminal penalties in connection with regulatory violations, and you have FBI agents showing up with folks from EPA or from the old Office of Pipeline Safety, and now people want to answer questions, and there needs to be answers to questions because you need to know how to put fires out. You need to know what chemicals are involved. There are very practical things that are happening, responses to airplane crashes. And there was the famous example of the pilot that disappeared. Because the folks, they don't want to take the risk, and they're much less willing to communicate, and it creates very real problems for oversight.
Barnes, at the local level, when you hit that, first of all, do you hit that kind of animosity from time to time?
Sure.
And what's the, where does that leave you and your clients?
Well, I think the biggest problem we find at the local level is you file an application, you deal with your staff coordinator, and you work it out with your staff coordinator, you come to an agreement, and then you get a call 24 hours later. Well, I ran it past the county manager, and he said no. And I guess the biggest suggestion I would make to the government is empower your people so that whoever's out there on the front lines working with me, as we work through the issues and resolve those issues, let them have the authority. I think that's probably the biggest problem that I've run into. Trust is a big thing. I mean, you have to, the government has to trust you. If I'm going to be advocating on behalf of people, they got to know when I say something, I mean it and I'll stick by it. And also they have to trust the client. So I think it's a huge thing.
Let me pose a question to you, Eric, that touches on both of these issues of trust and communication. I would imagine that as a regulator, if you get a complaint from someone or a complaint from several people against a particular organization, you have to, and your folks have to, your staff has to retain a healthy degree of skepticism as to, on both sides of that issue. Both, is the complaint genuine, and the fact, what's the response from the business or from the organization that you're looking at. And the question goes to the issue of communication. Sometimes businesses are not that great at documentation or at record keeping, and they may not be able to respond with the kinds of information that you want and arguably that you need to be able to ferret out what the truth is. Does that leave a business, if they don't have the documentation, the records, seem to have lost our back, maybe? Does that leave the business as potentially guilty in your mind as a result of that inability to provide you with whatever the information is that you need?
Well, sure. If a complaint is filed against the merchant then is going to have some obligation to produce some documentation in response to that complaint. When we receive a complaint, let me just give you a quick example. We license and regulate tow truck operators. Huge problem in Montgomery County about people being towed out of shopping centers because they stayed there too long, or they were parked at the shopping center and they walked across the street to an ATM machine or to Dunkin' Donuts, and 2 seconds later their car was towed because they walked off the property. When we get the complaint, we notify the merchant in writing and say, here is the consumer's allegations. Please tell us your side of the story, because we know there are at least 3 sides to the story. And the merchant then has the obligation. But what's interesting is that with regard to, say, tow truck operators, they're very sophisticated. They have digital photographs of people walking off the property that they will immediately email to us to show that they did conduct a proper tow, that it wasn't in violation of the towing regulations in Montgomery County. But yes, it does create burdens for the business to be able to document that if the consumer alleges they didn't walk away and that they were towed and they shouldn't have to pay $150 to get their car back, that the tow truck operator then has to, the burden shifts to them to demonstrate that they were in compliance with the regulations.
So an inability to respond may effectively find you guilty.
That's potentially correct.
Okay. Sandy, as an attorney, you got any comments on that? Other than be sure you got your records and you got your documentation?
Well, for Maury, given what I do, my hats are off to the tow truck drivers. They're taking advantage of modern technology, and that's what folks should do.
Barnes?
No, can't think of anything.
All right, let me move on. I mean, I think this communication and trust issue is important. Oh, sorry, Lisa, go ahead.
I was just about to say, with many of the agencies I was dealing with, I was sending checks into P.O. boxes and had no telephone numbers, no contact people, nothing. And basically, when I asked for advice, I was just told to be patient because no one knew who was in charge or how to streamline the process.
The checks were cashed, though, right?
Some were cashed 3 months later. I mean, I tracked them. I don't know where the dossier sat.
Wow. Okay. So let me ask our regulators as well. If we are disappointed with the people that we're dealing with at a particular level in the organization, let me turn to you, Bill, for starters, and we want to move up the chain, there's always the kind of risk that John sort of spoke of, that, worry about retribution. We're still dealing with people within the agency. How do we know whether or not we ought to try to go over someone's head or just try to grapple with what might be an incompetent that we're dealing with at a particular level? I'm sure there's no incompetence in your bureau, but just in case.
Absolutely not. Never. It's a card that should be played very, very carefully. because you're dealing with people, and, you know, number one, you have the risk that you're going to tick off the person that you've basically blown the whistle on. But secondly, supervisors are very, very loyal to their employees. And, you know, sometimes what I've encountered over the years is a situation where somebody doesn't like the tone of a call, they immediately blow the whistle on somebody. And I think that sometimes that can be counterproductive. Nevertheless, I can understand, having done this on the other side for 20 years, you're working with someone, and it's very, very frustrating because for whatever reason, they're not listening to you, they're not hearing what you have to say. So, you know, I think in a case like that, it would be appropriate to call their supervisor, but do it in an appropriate tone and in an appropriate manner, you know, where you're not implying that everybody at the FCC, for example, is incompetent because you're not getting what you want. Don't come across as petulant, come across that you're just trying to get information, that you have a common desire to get the application granted, and you'd like to do it as expeditiously as possible.
Thanks, Bill. Let me ask John, when you've had the kinds of problems that the bank experiences with regulation of this sort, have you ever had the experience where you find yourself trapped between two regulations? In other words, that you get contradictory regulations?
Every day. Well, I think it's not so much getting trapped between regulations. I think what happens is you get trapped between interpretations of regulations and the enforcement of it. A prime example was back after 9/11. BSA and the Patriot Act was put in place, which brought in a whole new level of regulation into the banking world and made the banks the primary police of the financial or the payment system in the country. The regulators were, at the time that they were examining banks and getting up to speed on how to enforce BSA and the Patriot Act, they were regulating and they were examining at the same time and didn't know what they were doing. Hadn't been trained because it was so new. So in many cases at that point in time, because there were so many different interpretations of that regulation and the requirements of the Bank Secrecy Act, when there was a conflict or when there was a concern that couldn't be validated, or if something wasn't available in terms of technology to provide the answers that they wanted, they would resort to issuing an enforcement action. And the very basic enforcement action is a memorandum of understanding, an MOU. That was used fairly liberally because the regulators were still behind the eight ball and trying to catch up with how to deal with the legislation. So since they couldn't come in and get the answers they wanted, rather than say it just can't be done, the MOU was put in place to basically slow down the bank and enable them to catch up and the technology to catch up to what the data collection process really needed to be. I know in the state of Virginia, the state chartered banks, probably a third to maybe a little more than that, were issued MOUs during those years, simply because in a lot of cases, technology that was needed to provide the data or the monitoring that was required wasn't available by the service providers they were using. So it's a difficult situation, and I think a lot of times when the economy has trouble or there is a crisis, the tendency is, at the legislative level at least, to enact new regulation. And there's always a lag time there between the enactment and the enforcement level and expertise and understanding of the regulators who have to go out and examine the banks in this case. And that leads to a lot of discretionary decision-making that will put you between a rock and a hard place, between two conflicting interpretations of a regulation.
So let me mention at this point that in about 3 minutes, after one or two more comments from our panel, we're going to be happy to take questions from the audience. So hopefully you're all brimming with questions. We would like to ask that we get the first one or two questions anyway from students here. I think there are still some students here. And then we'll turn to questions from anybody in the audience. But let me follow up on what John says there. Barnes, let me ask you, as an attorney, when you get an interpretation from a regulator that you believe is incorrect and detrimental to what your client's trying to do, how do you deal with that?
It depends upon the situation. If if I'm requesting a discretionary act, I just have to accept it. And I have to argue it at the county board or the Board of Zoning Appeals or whatever. If it's in an appeal situation, I can take it to the board and hopefully that they will reverse that regulator. In listening to the discussion, for about 6 years in Arlington County, we had monthly meetings with the county manager. The county manager hosted it, and all the departments, the heads of the departments would come in, and a group of us, engineers, architects, builders, and we'd have these monthly meetings, and tons of problems were resolved. We had a change in board, change in managers, and they went away. But for that 5, 6, 7 year period, it was probably the easiest of my career because there was this constant dialogue. Problems were headed off, and they weren't allowed to fester and become big. And I would certainly recommend that. Like, for example, the bank regulators should probably be in meetings with bank leaders, and the secrecy stuff might go away.
So we're back to communications and transparency. Lisa, did you want to say something?
No, but I totally agree.
Sandy, I saw you shaking your head knowingly there when John was talking about 9/11 and the newness of regulations. What would you say here?
There are some that come into place, and that's where communication really does become key, because you're getting out into uncharted territory, and you have, if you want to use the banking industry, you have the bankers who are on the ground. They're dealing with customers. They're trying to make the economy move. You have the regulators coming in. They have a purpose. They sort of have to sort it out. And really, and part of what it gets to is, is the relationship going to be one of how to move the industry forward in a safe manner, whatever the definition of safety is for it, but in a progressive manner where it is going to be somewhat of a partnership, or is it going to become, as I said, as I referenced before, that gotcha moment where it's about telling you what you can't do, it's about telling you, it's about generating, their fines and generating penalties, and trying to appear to be, doing something, maybe getting a little bit out ahead of your charter, and what the result everybody really is trying to achieve through the regulatory process.
That is such a beautiful answer as it brings together where we started, the question of managers and regulators, partners, or adversaries. Do we have any questions from the audience? Any students want to come up? There's a microphone on either side. I think it's live. If we have no students, we'll then invite Mr. Keeney, come on up. Thanks so much.
My name is Stephen Keeney. I'm a second-year MBA student here. My question is concerning what was discussed with the waves of large-scale regulation that you see, especially in the financial sector. We saw Sarbanes-Oxley, we saw the Dodd-Frank bill. To what extent do the regulatory agencies at the federal and local level deal with ongoing regulation as compared to just defining and enforcing those giant waves of regulations? And from the management side, on an ongoing basis, how do you keep up with the smaller regulations that are changed or are tweaked or are created over time in between those big waves? So we all hear the big stories, but what about the little stuff in between?
So, Bill, go ahead. You take that one
Well,
first.
I can just again talk about that executive order and the smaller regulations and what we constantly try to do. We have hundreds and hundreds of regulations on our books since the FCC was created in 1934. What we try to do is take a fresh look at them periodically and see whether they need to be changed in any way to account for changes in the marketplace. For example, we have multiple ownership rules that govern how many broadcast stations one entity can own, and we're required by statute to take a fresh look at those every 4 years and determine whether they are in the public interest and justify them from ground one, not that from ground zero, not that, should they be changed, but, start with the idea of, is this trip really necessary? Is this rule required? And we do that for a number of our rules.
I don't want to cut you off.
That's it.
Okay.
Can I add one thing?
You sure can.
Let me give you a real-world example. When you talk about ongoing regulation, the waves that come need to be implemented and become part of what has already been built. So you're just adding to the pile as you go. Back 20 years ago, a bank my size, 400 million, would have an exam every year by the federal regulators or the state, whichever, it would alternate every year. But they would come in for about 2 weeks, bring 8 individuals in to examine the bank, and cover not only safety and soundness, but also the compliance exam. There's 2 exams in banking, those are the 2. Fast forward to current times, a similar $400 million bank like us, that exam now has been separated into 2 separate exams. The first one, the safety and soundness, now takes 3 weeks with 15 regulators, and the compliance exam takes 1 week with 5 regulators. So we've gone to 4 weeks with 20 regulators, and that is primarily, our books haven't changed, the volume of loans haven't changed, our nature of business hasn't changed. We're still a very basic community bank, but that is due primarily to the continual adding of regulations and regulatory oversight. That's basically what's happening.
Let me put a slightly different spin on this very good question Eric and ask. In Montgomery County, you've been with this agency for a while, it seems to be the want of many legislative bodies, including the Montgomery County supervisors, to add to the regulatory burden without necessarily increasing the resources that the individual agencies have. How do you deal with that problem?
Well, it's a big problem. You know, unfunded mandates, when new legislation is passed and the regulatory agencies don't have the budgetary ability, capacity to comply with it. I mean, keeping in mind that most regulations are responsive in nature. First, there's a crisis, then the government responds with a statute to address that crisis. We have, I mean, there are many examples of exactly what you're talking about. The state of Maryland passed a law to license locksmiths because there was a crisis with unregulated industry, and so they passed a law, but they actually wrote into the law that the law will only be implemented if the legislature provides funding to the Attorney General's office to license locksmiths. Well, the funding was never provided, and so the actual administration of that law never took effect.
Okay. Other questions? By all means, just go ahead up to the mic if you would.
Hi, I'm Gaurav Raj. I'm a second-year student. And my question is, it looks like just from hearing from John and Lisa, in terms of these regulations, they're a huge burden for your bank or your business. But from a federal government's point of view, are there any measures that will be taken in the future to kind of lessen the financial burden for small businesses and small banks?
Bill, you're the federal guy here.
I do have a bank account.
Yeah.
I can just tell you that, again, from the perspective of the FCC, although we have rules that govern particular industries, there are exceptions for smaller companies for just that reason, where the burden would be too great. For example, there are rules that deal with cable companies, but if a cable company has below a threshold of subscribers, the requirements on them are somewhat less. So we are sensitive to that issue, and again, we are increasingly sensitive in light of these executive orders that came out last year. Again, whenever we set up a rule, we look at it from the context of what will be the cost to industry and what will be the benefit. And some of the things that we consider is whether there should be different degrees of regulation based on the size of the company or the resources of the company that's going to be subject to that regulation.
Sandy Greenberg-Trorig, I know, covers a lot of industries, and I know your practice is not just limited to the energy field. Do you see anything, hear anything that suggests that the wheel of fortune will start spinning in the opposite direction in terms of the amount of regulation?
We heard talk. I mean, right now I have no evidence to show that that's the case. The evidence is still going the other way. Now, just as an example, on the enforcement side, what's very popular now in the federal regulations is there's a little catch-all after they tripled or quadrupled the penalties for an act that says, well, if it's an unduly burdensome on the business and on a financial side, you can submit that, and we've submitted financial records on behalf of many clients to try to lower the penalties, but what the burden is on the business and how that plays out is incredibly subjective, or is treated as very subjective. So that's still a tough road to hoe.
Okay. Other questions, sir?
Yeah, my question is a general question. I find it ironic that just yesterday we had the CEO of SK Law dispose of what he thought, whether in fact he thought he actually had vitiligo. So I'm sure this topic comes up in your industry, so.
Two questions.
All right, Lisa, I think everybody wants to know the answer to the second question first.
All right, let's start with the second question. The late Michael Jackson most likely had vitiligo or hypopigmentation, but there are bleaches available called hydroquinone, and you can use it as a 20%, and you can make anyone lighter skinned. The only problem is you don't end up the color you want, you end up the color of the tablecloth, and it's not controllable. And there have actually been lawsuits where spouses or girlfriends end up also getting bleached just by skin contact with the bleach. So that's the answer to question number 2. Too much Benequin and perhaps inadequate treatment and counseling for vitiligo. For question number 1, international regulation. For example, we use certain chemicals to treat warts and other viral ailments in children. And there's something called cantharidin, and it's been used in dermatology for about 40 years. And it's made by a small company, and it's an extract of beetles. And I don't know what they do to the beetles to get the extract, but it's probably not very pretty. But there is no way that the supplier of this can do the FDA regulation for cantharidin to get it through the market, through all the proper regulatory channels. So they did file for an exception saying, can't we be grandfathered in because this has been in practical use for 50 years. So it all depends where one is practicing. In other words, I've practiced in hospital settings where someone from the hospital would come in and seize the bottle of cantharidin and say, this is not FDA approved, how can you be using this? And I've stood in front of pharmacy committees of at least 2 hospitals saying, we do use this drug, it's been safe for 50 years, the company can't afford to do the $1 million studies, but I would use it or use it on my own child, and it's pretty safe. No deaths have been reported unless you drank the whole bottle, but no one's ever done that, thankfully. But I guess in a private practice setting, you're able to do certain things like this. In other words, you can, up to a point, use, for example, the Beetlejuice extract on children. But other things, there are skin creams that are licensed in Europe. There are vitamins that people take overseas that cannot be sold through private practices because there's regulatory issues. And if you were to, Johnson & Johnson and some of the other major pharmaceutical industries have very large lobbying groups where there are critical ingredients in certain sunscreens that are widely used in Europe that will not pass through the regulatory agencies in the US just because they're protected.
Orange, do you have any international dimension to your practice at all?
No, I don't at all.
Eric, do you get involved in international stuff ever?
Not really, though. We did have one interesting case with the packaging of food in the country of origin. Again, same situation where the FDA had certain rules that if the product was grown in China but packaged in Japan, that the package could then say product of Japan. And this happened at a time when there was some question about the safety of food grown in China. And Liz Crenshaw on Channel 4 TV did an interesting story. And just one quick plug, on YouTube, we have a YouTube channel called Consumer Wise, Consumer, W-I-S-E, one word. And we have several hidden camera stories that we've done in conjunction with Liz Crenshaw, and that was one of them, the origin of food products.
Let me go all the way down the table. Sandy, I know you do a lot of international stuff. The question was about international regulation.
And it's one area where American export is going strong because we lead the world in regulations, and there tend to be a lot more of them going overseas than coming back this way. I mean, the biggest issue people have is with inconsistency. because there aren't necessarily the universal bodies setting the regulations. And one of the ones that I see coming up a lot is privacy regulations over personal information, of which the Europeans are way out in front and lap us. And I'm not saying this is a good thing or a bad thing, but what they treat as personal and their attitudes, for example, towards business computers. So it's amazing to see a company here gets a subpoena, or they need to talk to their regulators, and they just go in and everybody's computer is the company's information. And it's easy, but not the case in Europe, where if you have a network above a certain size, that makes you a telecommunications company. And therefore, everything's private. So their businesses are going crazy on how to comply with certain requirements simply to provide information. Their U.S. subsidiary, it's easy, and then they go to their European subsidiary, and they come back and tell the U.S. regulators can't do it. And it creates some interesting reactions.
John, do you, with international money orders and that sort of thing, get into much?
Well, I'm pretty sure we bank an international house of pancakes. And we're pretty good at that. As a local community bank, we really don't get involved in international trade. However, with BSA and the Patriot Act, we are a watchman for countries that are individuals and countries that are on the OFAC list. So that is a part of what we do, but not a commercial transaction.
And Bill?
We have an international bureau because radio waves don't honor geographic or political boundaries, and they coordinate with foreign countries spectrum use and administer telecommunications and satellite programs and promote pro-competitive policies abroad. So we're very engaged in the international aspect of communications regulation.
And I'll say for myself, I'm the moderator, but I will comment on this topic. And because of the businesses that I represent, which are privately held, I do have a fair number of businesses that more and more are getting engaged and involved in international transactions. Surprisingly, the OFAC issue, that is the anti-terrorist control, is not an infrequent problem to run into and very difficult in many ways to deal with because it often involves proving a negative, proving that you're not a terrorist and that you're not shipping stuff overseas that might be used in some dangerous way, that you could fill this bottle with gasoline and turn it into a Molotov cocktail, and therefore it's potentially an OFAC issue. In terms of the international regulations themselves, the only experience I have with that is primarily with the World Intellectual Property Organization, involved with trademarks, which I do a fair amount of work in. And the one thing I'll say is regulation seems to be regulation, and the same kinds of problems that we've talked about here of communications and trust and delay and so forth is, for better or worse, not limited to the United States. So I've said enough on that. Do we have another question from somewhere in the audience? We do indeed.
Hi, I had a question for Mr. Freedman of the FCC. Earlier you mentioned the President's executive order requiring cost-benefit analysis of new rules. And my question is how that would apply to a rule designed to provide sort of a social benefit, for instance, decency in broadcasting, and how you would evaluate a new rule trying to improve decency in broadcasting. And then actually a second question for Mr. Freedman or Mr. Lawson would be how or whether this sort of cost-benefit analysis is widely applied at the local or state level, and is this a direction that local and state governments are moving in?
There are assumptions where a rule is required to provide some sort of a social benefit. For example, one of the things that we're considering in my bureau are rules that deal with a practice that's known as cramming, which is where a telephone company puts third-party charges in a phone bill, arguably hidden, that the person who receives the phone bill has no idea that they've ever ordered the product, let alone benefited from it. So as far as the cost benefit is concerned, there would be cost to the industry if there were disclosures made or some impediment to providing that type of billing on a bill, but the benefit to the public is inherent that the people would not be defrauded. Similar in something like indecency regulation, you really don't get into a cost-benefit consideration. It's more a question, as what's going on with the Supreme Court right now, the question of whether that policy is constitutional.
Barnes, did you want to weigh in on that?
Yeah,
terms of-
as the second part of the question, the local level, there's very little formal cost benefit because there's not regulations. Almost all laws are passed by the legislature, which is the county board in Arlington, the Board of Supervisors in Fairfax. Those that are going to be impacted by regulation have a right to show up, and we can certainly discuss the impact of the forthcoming law that the board is contemplating, but it's not done in any formal sense.
Okay, I think we got time for maybe one more question, if there's any volunteers in the audience. Anybody else want to approach the microphone?
I'll take the top one. Maury, how are you?
Good to see you, Bill.
My name is Bill Warnke. I'm a small business owner here regionally. My question is about politics. And more off of the experience, Mr. Maxwell and Mr. Freedman, I'll direct this to you first, is that we're hearing a lot of rhetoric about what would happen if there was a power change in Washington on the Hill, and we hear about downsizing government and changing regulations. In your history at FCC and John, 30 years in the banking industry, does it ever happen? I mean, does it really, we hear about the EPA possibly closing or the plans if somebody is elected to do those things. Have you ever really seen the downsizing of regulation? And I'll leave it at that.
No.
Would you like to say anything more on the subject, John, or is that?
No.
No. Bill, how about what's your view?
Well, I can tell you this, is that when they talk about downsizing government, it's often a focus on the resources that are available to the agencies that are authorized and have the responsibility to enforce rules, rather than eliminating the rules themselves, which can create, as we've discussed on the panel earlier, a tremendous squeeze on agencies to try to be efficient, to try to get the work done. You still have the same caseload, you still have the same laws to enforce, but you have less staff with which to do it. And honestly, that's a tremendous challenge at agencies like the FCC.
Let me give everybody on the panel one last moment to, if there's a last word they want to say that we haven't covered. Sandy, I'll start down at your end, if that's okay with you.
Sure. Going back to what Maury's theme here is, with the explosion of regulation, it's in what the last question said, it's not going away. I mean, I could tip politically my hand and say it's too much to wish for, but I'd also be out of business. It's not going away, but hopefully there can be some more balance and make the goal of the regulators and the businesses coincide a little bit more about how to keep the businesses going and growing and not just being a burden.
John?
Yeah, from my perspective, or from the banking industry's perspective, I think the answer to crises like we've experienced over the last 5 years isn't necessarily piling on more regulation. It's instead looking back at the financial oversight. Unfortunately, the exam cycle or the exam process with the regulators at the federal level is counter-cyclical. You would expect that when the good times are there, or what you would hope for is that when the good times are out there and banks are making loans and encouraged or susceptible to taking more risk, that the regulators would be more stringent in their oversight. The exact opposite happens. When times are good, the examiners have a tendency to be a little more lax and a little more forgiving in terms of how they interpret what they're looking at. Because the economy is good, the assumption will be that, hey, it only gets better next year and this will be corrected. Unfortunately, when the cycle turns at the end of a business cycle, and if it's as severe as it has been over the last 5 years, the tendency is to go to the other extreme and start to enforce the regulation or the financial oversight with a very stringent method. And that clamping down only exacerbates the problem and makes it difficult for banks to do what they're supposed to do, and that is move the economy forward, make loans, et cetera. In reality, what needs to happen is not more regulation, but consistent oversight and financial oversight of the banking industry. When times are good, the regulators should be as tough as they normally would be. When times are bad, they need to be a little more lenient and give banks a little more leeway in terms of how they're dealing with the crisis to to ensure that the safety and soundness issue is there and to continue being a going concern and feeding the economy and growing the economy.
Thanks, John. Bill?
My observation is going to be a little more sort of down to earth, in the weeds, practical. Having worked at the FCC and also represented people before it, I can understand that there are frustrations on both sides. And I would just like to underscore what's been said on this panel, that the key is really communications and trust. I can tell you that somebody doesn't get up in the morning and go to the FCC and say, you know what I'm going to do today? I'm really going to work over this applicant. I'm going to make his life miserable. There is a common objective in getting people authorized, in getting people what they need, in taking enforcement action if there's been a violation. And the key is really the relationship. It goes back to the people. So I would urge that people that feel frustrated in dealing with a government agency, I think something that's extremely useful is setting up a meeting and having a discussion and finding out what constraints each side has and what the expectations are. A lot can be accomplished if a dialogue is established.
Eric?
Clearly, the nightmares that you'll hear from the regulated community can be real, but I would also suggest that sometimes government regulation is an impossible task. And I'll just leave you with the best example I heard just 2 weeks ago. If anyone listened to WAMU, Kojo Namdi's show, when they interviewed the director of the DC Consumer Regulatory Authority, they're trying to regulate food vendors out of trucks. And if you could ever imagine an impossible task to make the truck owners happy, to make the restaurants who have brick and mortar stores happy, to make everyone, I mean, listening to that show, I came away thinking absolutely impossible task. And lastly, on communication and trust, I know there's Montgomery County, then there's the rest of the world, but I will assure you that if you send an email message to County Executive Ike Leggett or any director of any agency in Montgomery County, you will get a substantive response within 48 hours.
Lisa?
Well, I'd like to leave you with a story. I get inspected once a year, and the inspector and I talk about not just how the lab works, but what we do for each other. And it's a day sort of spent trying to figure out how an outside observer looks at one's occupation and how one could be better. And I'd like to tell a story of two lumberjacks who were in a competition for who could cut down the most trees in one day. And one of them was working really, really hard, nonstop with a chainsaw. And the other one also had a chainsaw and took off 10 minutes every hour. And at the end of the day, the one who was working continuously was sure he was going to win. And to his dismay, he found out that he had managed to chop down about 25% fewer trees than the one who took a break for 10 minutes every hour. And the lumberjack who had cut down the fewer trees and lost the competition said, "What were you doing the 10 minutes that you weren't cutting down the trees, and how did you win?" And the other lumberjack said, "I used the 10 minutes to sharpen my saw." So we have to look at regulation as something that can help us and make us sharper, even though it can be a nuisance at times.
Barnes?
That's a great story. I think that interaction and understanding where each side's coming from, communication and trust, I think that's what the best thing I can suggest.
Okay, thank you. I think that's what we pretty much take away from this. To summarize the takeaways, they seem to be, first of all, establishing trust and maintaining your communication. And I will say, as an attorney, and I stress this in my classes, I find that frequently the circumstances that create litigation, the circumstances that create disputes more often than not, are a function more of poor communication than rather an inability to make things work out. Secondly, that in addition to establishing trust, to understand what it is that's going on and to seek information, to be sure you know what your own posture is and that you are in compliance, that you, when I say that you have the ability to do what the regulator is asking you to do, and if you don't, to be able to deal with that regulator directly on a communicative basis, and to be willing in extreme cases to try to go up the chain and get help. And in the most extreme cases, if you have to, that there are certain times when you may just have to fight. What comes to mind in closing is the famous statement of the fellow who was sort of the inadvertent progenitor of the Los Angeles riots, Rodney King. Can't we all just get along? I thank you all for coming. And our reception starts immediately right at the top of the steps. You're all invited to stay, to talk with our panelists, to have something to drink and a snack. And thank you again all for coming. These proceedings, in the words of Douglas MacArthur, are closed.